This month, my InvestEngine stocks and shares ISA hit a big milestone in reaching 60k. This is a huge step towards my goal of building a 100k ISA portfolio by 2027. And it's crazy for me how quickly this portfolio has grown since it reached its last big milestone of when it reached 50k. It's crazy because it took 1 year and 7 months to build my first 10k from April 2022 to November 2023. But going from 50k to 60k took less than 3 months. This shows the power of the compound effect. Anyone who's watched these update videos before will know that I bang on about compounding, and now it's really starting to kick in because my portfolio balance is getting bigger, so my money is working harder. In this video, we'll go through exactly how the compound effect is boosting my portfolio's performance. We'll break down the portfolio. We'll go through how the individual ETFs are performing, and we'll go through what's driving the performance for this portfolio. Then we'll finish the video by going through my future plans for the portfolio. If you're new here, I'm Finch, a management consultant by day, and on this channel we like to discuss all things personal finance with particular focus on how to grow your money through investing. If this sounds good to you, and if you'd like to follow my journey to 100k ISA, then I'd greatly appreciate subscribe. But for this video, let's get into it. And let's start, as always, by taking a look at how the markets have performed over the past month. It's been a good month for the American stock market, as the S&P 500 is up by 4.20% over the past month at the time of recording. This has meant it's set a record high this month. If we bring it close to home, the FTSE 100 hasn't performed as well. It's in the red. It's down by 0.77% over the past month at the time of recording. However, it has been on a good run recently and for most of the year. And more generally, the global markets have done extremely well this year, and particularly this month, with many global market indexes recently setting record highs. One of the key reasons driving this performance is likely the much anticipated Federal Reserve rate cut. This month, the Fed cut its key interest rate by 0.25 percentage points. This was the Fed's first rate cut this year, and put the target range for its main lending rate at 4% to 4.25%. This was good news for stocks because a reduction in the interest rate reduces borrowing costs, and cheaper credit usually boosts business investment and consumer spending. So hopefully the Fed continues with more rate cuts, as it will likely be good for the markets. Now we know it's been a positive month for the global markets and a particularly positive month for the American stock market. Let's bring up InvestEngine's app and take a look at my portfolio's performance. We can see that my portfolio now has a balance firmly above the 60k mark. It has a balance of £60,626 to be exact, and within that, 1,500 is sitting as cash waiting to be invested. I'm recording this on the weekend, so as soon as the markets open in the week, this money will automatically be invested into my chosen ETFs through the Auto Invest feature. And more generally, now I'm above the 60k mark. That means I'm over 60% of the way through my journey to reach a 100k ISA portfolio. At least at the time of recording. By the time I post this, my portfolio may have gone down, but at the time of recording, I'm above 60k. And this is a big milestone for me, because at times it's felt unachievable to get to 60k. And it still feels a little unachievable to get to 100k. At times it's felt out of reach. It doesn't feel like that anymore. It feels more and more achievable because I'm benefiting from the compound effect now. When I started my portfolio, I didn't really see the compound effect in action. Even when I was at 10k, I didn't see it. But now I'm at 60k, I really see it. And let's take an example just to show the power the compound effect is having on my portfolio. When I was at 10k, a 10% increase in that portfolio would equate to £500. And this is still a meaningful sum, but relative to what 10% is for a 60k portfolio, it's less meaningful, as 10% for a 60k portfolio is £6,000. And this shows the power of the compound effect, as the bigger the base, the more impact a percentage increase has on the portfolio in pound terms. And that's what I'm seeing at the moment. And that's what I've seen over the past month in particular. As we can see that over the past month, My portfolio has increased by 3.36% in percentage terms and over £2,000 in pound terms, £2,053, which I'm really happy with. And in terms of the graph here, we can see that over the past month, I've made my usual monthly 1,500 contribution, and across the month, the portfolio steadily increased, and there was a nice increase, particularly at the end of the month when that Fed rate cut news came in. So there's been good, steady performance this month. In terms of the overall performance since I opened this portfolio, let's go to the Max tab. We can see that I'm up overall by £9,956 in pound terms and over 37% in percentage terms. The day before I recorded this, the portfolio actually hit the 10k milestone in terms of investment return, but since then it's dipped under 10k again. I was hoping it would stay there for this video, but hopefully that the next portfolio update will have some good news and it will return above 10k in investment return. Nonetheless, I'm still really happy with this performance. And now we know all about the portfolio's overall performance, let's take a look at the individual ETFs driving the portfolio and their performance over the past month. And as always, let's start with the biggest ETF in my portfolio, the HSBC MSCI World. This fund is up by over 3% in percentage terms and over £1,553 in pound terms. And a key reason why this fund has likely done well over the past month is the American stock market performance, as this fund is heavily exposed to North America. If we take a look at the regional view, we can see that nearly 70% of this fund is exposed to North America, and in terms of the individual holdings, we can see all the biggest holdings are American companies, and some of these holdings have done really well over the past month, such as Alphabet, and this will have driven the good performance this month. The next fund is my best performing fund this month, and it's actually my best performing fund overall, and that's the iShares Physical Gold. This is up by 10.48% in percentage terms over the past month and over £271. So I'm really happy with this fund, but understand that this performance will likely end at some point. It's due a bad period. The next fund hasn't performed as well, and that's the iShares Core MSCI Europe. This is my worst performing fund this month. It's in the green, but it's only in the green marginally. It's up by 0.43% in percentage terms and 64 pence in pound terms. I can't complain too much though, as it's not in the red, it's still in the green. The final fund in my portfolio is the iShares MSCI World Small Cap, and this is also in the green, meaning I have a clean slate of positive performance among all my ETFs this month. This fund is up by 4.2% in percentage terms and over £227 in pound terms. And if we click on it, we can see that there was a spike at the end of the month with this ETF. And this coincided with the timing of the Fed rate cut, so it likely did benefit from that rate cut decision. Or it's just coincidence in terms of the timing of this spike, but historically small caps have seen outsized impacts of Federal Reserve rate cuts because they tend to benefit, historically at least, from lower interest rate environments, as they typically use borrowing to fuel growth. And if interest rates come down, that means borrowing comes at a lower cost and it's more feasible to borrow more money to try and fund business investment and grow. Nonetheless, whatever the reasoning, the cause of this good performance, I'm happy with it, as it's led to this small cap ETF increasing in value over the past month and benefiting my overall portfolio. Now we know how these ETFs have performed over the past month, let's quickly take a look at their overall performance. We can see that the best performing fund by far is, as we mentioned earlier, the Physical Gold Fund. This is up by over 81%. The next best fund is my HSBC MSCI World at over 42%. Then comes the World Small Cap Fund, which is at over 27%. And finally comes my iShares Core MSCI Europe Fund, which is up 10%. The final fund in the Europe Fund is the newest addition to my portfolio. I've only had it for a few months, so I'm really actually quite happy with that 10% performance. In terms of what I invested my 1,500 monthly contribution in this month, we can actually look at a new component on the home screen here in recent transactions. And if we go to trading transactions, we can see that I invested in 3 ETFs. The biggest investment was £1,350, going into my world fund. Then I invested £75 in the gold fund and £75 in the Europe fund. I didn't invest in the small cap fund as I actually have a bit more exposure than I ideally want in this small cap fund. So I'm not investing any more money into it at the moment, and I probably won't in the coming months. I'll probably continue investing my allocation as I've done this month in putting 90% of my 1,500 into my world fund, 5% into the gold fund, and 5% into the Europe fund. So that's my future plans for the portfolio, continuing to invest 1,500 every month and being consistent with my deposits. Let me know how your portfolios have performed over the past month, and let me know how you think the rest of the year will pan out, as so far it's been a really good year for the markets, but it can turn at any point, history tells us. Thanks.